The Trader's Wilderness, Why 90% Get Lost, and How the 10% Find the Map. Introduction. The Mirage of the Market. Every single year, millions of us step into the most dynamic, ruthless, and beautiful marketplace on Earth. We come chasing the ultimate prize, financial freedom. We're not here for a 9-to-5, we're here to make our own rules. We see the screenshots, the testimonials, the promise of a life where a single click changes everything. It looks like a cheat code to wealth. But let me pull back the curtain on the reality you're not seeing. While millions rush in, the brutal truth remains. 9 out of 10 retail traders will fail within their first year. They lose their capital, they lose their confidence, and they simply vanish. It's a mass exodus that happens so often, it's almost predictable. The popular gurus will tell you they failed because they didn't know enough about the MACD, or they didn't use the perfect harmonic pattern. No, that is nonsense. The strategy, the technicals, that's maybe 10% of the game. The real reason they quit, the one that nobody wants to talk about, is that the market is a crucible for character. It tests your mind, your patience, and your emotional stability. It's not a test of intelligence. It's a test of endurance. Most traders quit because the market broke their mind, not their strategy. They got lost in what I call the trader's wilderness. The journey to consistent profit is a psychological trek, and the 90% quit because they were looking for a shortcut through a landscape that demands endurance. Before we dig into the 3 traps that claim almost everyone, hit that like button if you've ever felt the absolute terror of a losing trade. It helps this message reach the people who need to hear it most. And if you're new here, subscribe for more insights into the profitable mind. Trap 1. The illusion of speed. The first and most dangerous trap is the illusion of speed. It's the belief that trading is an income stream you can turn on in 60 days. Think about it. To become an accountant, a lawyer, or a certified plumber, you sign up for years of study, exams, and apprenticeship. You accept the long game. Now, you step into the world of global finance, competing against algorithms, hedge funds, and institutions with unlimited resources, and you expect to be consistently profitable in 3 months? 6 months? It's a little ridiculous when you say it out loud. But we all fall for it. Why? Because the internet sells a fairy tale. It sells the "I quit my job in 90 days" fantasy. So when reality delivers its first brutal lesson, a 20% drawdown, 3 days of relentless losses, or just weeks of monotonous break-even, the emotional collision is catastrophic. You feel betrayed. You feel cheated. You think, if I'm smart, why isn't this working yet? But the market doesn't reward brilliance. It rewards time in the chair, spent practicing correct habits. The 90% quit because they treat trading like a lottery ticket, a quick chance for life-changing money. The 10% treat it like a demanding, multi-year PhD where the tuition is paid in losses and the currency is patience. I remember my early days. I used to spend hours watching motivational videos and 30 minutes actually journaling my trades. I spent more time planning what car I'd buy than I did planning my risk per trade. When I blew up my first 2 accounts, I blamed the broker, the news, even the time zone. Never once did I look in the mirror and say, hey, maybe I should treat this like a profession and stop gambling. They refuse to endure the boring, tedious, unglamorous process of data collection, journaling, and incremental improvement. They quit the moment the adrenaline wears off and the work begins. Trap number 2. The emotional tsunami. If the illusion of speed makes you start wrong, the emotional tsunami makes you stop entirely. This is where most dreams drown. Trading is the ultimate psychological mirror. It reflects every weakness back at you. Your impatience, your greed, your need to be right, and your deepest fear of loss. For many, that first significant loss is not just a financial event, it's an identity crisis. You watch the red numbers grow. The fear is visceral. It screams, "Get out! Save what you can! You're a fool!" So you close the position, often right at the bottom, locking in the maximum pain. Immediately, the chart reverses. Now, fear is replaced by rage. The market stole your money. You chase it. This is revenge trading. You double the lot size, abandon your strategy, and open a trade based on a cocktail of fury and desperation. You are no longer trading the chart. You are trading your pain. This cycle, fear, anger, revenge, and loss, is the emotional spiral that blows up 90% of accounts. It's the moment they surrendered their discipline to their emotions. The profitable 10% don't feel this less, they simply respond differently. They have installed a psychological anchor, risk management. They know the loss is a defined cost of doing business, not a personal attack. They can look at a 1% loss and say, "That's tuition for today's lesson," instead of, "I am a failure." When you let your profit and loss dictate your self-worth, quitting is inevitable. You cannot handle the discomfort. The core misinterpretation. Loss as data, not a verdict. The psychological difference between the 90% and the 10% boils down to how they interpret failure. Imagine you're digging for gold. You've been at it for months. Your body aches, your hands are blistered, and you found nothing but dirt. The average person, the one who quits, drops the pickaxe and walks away, convinced the spot is barren. They interpret the dirt as a verdict, a sign that they were never meant to find gold. What they don't realize is that the gold was just 3 feet deeper. In trading, the gold is consistency. It's not one big score. It's the ability to execute your plan flawlessly over and over. When the 90% hit a losing streak, they say, "This proves I don't know what I'm doing. I should quit." The 10% say, "This is fascinating. This loss is a piece of data. What did I do wrong? Was it my entry, my exit? Did I break my rule? Let me log it, analyze it, and adjust the system." They treat failure as tuition. Every mistake is a lesson paid for in capital, making the next trade smarter. The 90% see failure as a dead end. The 10% see it as a course correction. You must stop blaming the external market and start extracting the internal lesson. If this concept of viewing losses as data is new to you, share this video with a friend who's struggling with their trading psychology. We need to normalize the discussion around failure being part of the process. The survival kit. Process over outcome. The way out of the trader's wilderness is to install your survival kit. A simple, powerful shift from obsessing over outcomes to obsessing over process. Most beginners only care about the result, the green number. This obsession fuels anxiety and emotional trading. The successful trader, however, becomes almost bored with the results and obsessed with the adherence to the rules. This is the process. Preparation. Do you have a rule for every situation? A pre-market checklist? Execution. Did you enter and exit exactly as your plan dictated, even if it led to a loss? Review. The golden hour. After the market closes, you must spend time reviewing every trade, not to self-flagellate, but to refine your edge. We call this falling in love with the monotonous. Discipline isn't glamorous. It's boring. It's the same routine every single day, regardless of whether you made money yesterday or lost money yesterday. The market will reward your consistency, not your frantic activity. The 90% quit because they can't handle the boredom. They crave the adrenaline. The 10% find freedom in the structure.
They realize that when the process is perfect, the positive outcomes are inevitable over time. If you don't have a plan you can follow, you don't have an edge. You have a wish. And wishes don't survive long in this market. The breakthrough zone, the final test. Now, let's talk about the most tragic moment, the moment most traders quit. It's the period right before the breakthrough. It's what we call the plateau of despair. You've been at it for a year, maybe two. You stopped revenge trading, you've got a journal, you're following your rules 80% of the time. But your account equity curve looks like a flat line. Maybe it's even dipping slowly. You are grinding, but you see no light at the end of the tunnel. The pain of struggle is at its peak. Your mind starts fabricating reasons to stop, like, I've wasted 2 years. The smart money is making me look stupid. I should just put this money into an index fund and be done with it. This is the market's final, most powerful test. It's a test of your temporal patience. You are so close. All the lessons, all the emotional control, all the data points you've collected are about to compound. Consistency is built slowly, like pressure in a mountain. For months, it feels like nothing. Then suddenly, the mountain moves. But if you walk away one day before that geological shift, you miss everything. You need to develop a time horizon of 5 years. If you treat trading as a 5-year commitment to learning and discipline, that 3-month drawdown suddenly loses all its power. Endure the struggle, because the struggle is the preparation. The 10% understand that the pain they feel today is simply the fee for the success they will earn tomorrow. Conclusion: the choice to endure. So why do 90% of traders quit before they succeed? They quit because they demand speed where the market demands patience. They quit because they allow their emotions to dictate their behavior. They quit because they mistake temporary discomfort for permanent failure. They were looking for an easy path and found a hard truth. You have the truth now. You have the map. Your path to profit is not a secret strategy. It is a choice to persist. It's a choice to be bored by discipline, to welcome the feedback of a loss, and to operate with the cold, hard logic of a machine. The market does not reward your effort in the moment. It rewards your endurance over time. Be the one who stays in the chair. Be the one who keeps journaling, keeps reviewing, and keeps showing up, even when nothing seems to be working. If you can do that, if you can simply refuse to quit, you will eventually find yourself on the other side of that 90% statistic. You will find that the journey to consistent profit was a journey of self-mastery all along. If you learned something new about your psychology today, make sure to subscribe for more deep dive analyses. And let me know in the comments, what was the biggest emotional mistake that almost made you quit? We are a community, and your struggle is someone else's lesson. We'll see you in the next video. Bye-bye.